Dear viewers, welcome to our channel GVS Bank Academy. Today I am going to discuss about Bank Financial Management CAB second paper, and this is also important optional subject risk management also paper number 5. Most important questions for revision part 2. This is part 2. Now for JAIIB October 2023 exams, we are commencing classes from first week of June 2023. Interested members are requested to contact on this number, and for revision classes of CAB June 2023 are in progress. Important questions for revision. Ready forward. Repo repurchase obligation ready forward. Repurchase ready forward contracts. The securities which are accepted, only dated securities, means central government, state government dated long term securities, treasury bills 91 days, 182 days, 364 treasury bills, cash management bills up to 90 days. All these securities are accepted under repo borrowing from RBI. At the time of borrowing from RBI, banks have to give security. What securities? Dated securities, treasury bill, cash management bills. Question number 2. RBI has imposed a ceiling of 5% of total business of banks' investments. Total business during the year in investments, buying and selling, total, not exceeding 5% through a single individual broker. So this is the individual broker ceiling, not exceeding 5% of total investment business, that is equal to buying and selling during a particular year, not exceeding through a single broker 5%. That is the limit. Third, functions of treasury: main liquidity, reserve management, CRR, SLR management, funds management is also main functions of treasury. Liquidity, CRR, SLR. Mostly we are allowing European options allowed in India. European options means the maturity date is and the settlement date is on the maturity date of the options. That is the European options. Question number 5. NDSOM, negotiated dealing system order matching. NDSOM, negotiated dealing system order matching, is owned by RBI, operated by Clearing Corporation of India. The Government of India money market, call money, notice money, term money, settlements, CCL using the NDSOM. Foreign exchange market transactions, FX Clear platform is using by CCIL. FX Clear is forex settlements. This is both are important. That transfer pricing policy is in a part of asset liability management. Transfer pricing. 7. Proprietary positions. Proprietary positions, bank is buying, selling, taking a position for own purpose. Bank self business purpose, that is called proprietary positions. Trading positions, buying, selling, taking positions for bank own purpose, that is called this. 8. CCL maintains settlement guarantee fund. CCIL maintains settlement guarantee fund. How it is maintaining settlement guarantee? It is collecting some amount of money, percentage of margin from all the parties, from all the constituent parties, in order to avoid settlement failures by banks. By collecting some part of the amount in advance from the members, constituents, it is creating a settlement guaranteed fund, and because of this fund, this is going to avoid the settlement failures, payment failures in CCIL. 9. Financial markets, trade reporting confirmation platform, FTrack, financial market trade reporting and confirmation platform operated by CDSL, Central Depository Services Limited. Financial market trade reporting transactions, commercial paper, certificate of deposit, OTC trades, they have to report to abstract within 15 minutes. So that's why financial market to trade reporting this. Value of derivative is determined by value of the underlying. The derivative definition is 3 points. Value depends upon underlying. Derivative settlement at a future date. Initial investment derivative is nominal or negligible. This is the derivative definition. Very, very important. Currency futures started in August 2008. In India, currency futures, derivatives in currency futures started in August 2008. Basic options means simple, plain vanilla, or vanilla options, plain vanilla options, basic, without any complicated features is called as basic options, plain vanilla options. Question number 13. The sensitivity of the bond price to change in interest rate is called bond price volatility, and it can be measured by modified duration. The sensitivity of bond price to change in interest rate, change in the bond price to change in interest rate is called bond price volatility. It can be measured by modified duration. What is the formula for modified duration? Macaulay duration by divided by 1 plus R. Yield. R means yield. 1 plus R. Modified duration. Question number 14. Tripartite repo introduced by Clearing Corporation of India. Tripartite repo introduced in the place of CBLO. CBLO means collateralized borrowing and lending obligation in 2017. It was introduced by RBI. Tripartite repo in the place of CBLO, collateralized borrowing and lending obligation basis, in order to reduce reinvestment risk. Normally, in Government of India securities, reinvestment risk is there. To avoid or to reduce the reinvestment, banks try to match the duration of their assets and liabilities. Duration of the assets and liabilities try to match. Then at the time there is no reinvestment risk the bank has to face. 16. Loss absorption capacity of Tier 2 capital bonds is lower than that of Tier 1 capital. It means Tier 1 capital bonds can absorb loss capacity when compared to Tier 1 capital bonds are having higher loss absorbing capacity than compared to Tier 2, or loss absorption capacity of Tier 2 capital is lower than Tier 1 capital instruments. You can be adjusted, written off, adjusted without triggering the bankruptcy, whereas Tier 2 capital bonds can be triggered, adjusted, liquidated only after at the time of liquidation. That's why loss absorption capacity of Tier 2 capital bond is lower. Question number 17. Elements. What are the parts of Tier 2 capital elements are? General provision on standard assets. General provision of standard assets. Floating provisions. Investment fluctuation reserve. Provision for country risk. All these items part of Tier 2 capital. Tier 2 capital. Tier 2 capital. Liquidity coverage ratio with effective from 1st April 2021. Applicable percentage is 100% of net cash outflows during next 30 days. LCR, liquidity coverage ratio, 1st April 2000 would be minimum 100% of net cash outflow during next 30 days. Next, net stable funding ratio implemented in India with effective from 1st October 2021. Net stable funding ratio, this. Presently, net stable funding ratio requirement is also 100% of funds up to, this is 1 year origin. Liquidity coverage ratio up to 30 days. Net stable funding ratio up to 1 year. The 100% they have to maintain. Banks, in the banking book, banks total advances and total deposits from the public, total normal deposits are grouped or parked under banking book. Banking book means till its maturity of advances or till its maturity of deposits. These are going to be continued, parked, grouped under banking book. The 20 questions today I am trying to discuss. Thank you very much, friends, for the support for our YouTube channel.